One of the most common questions I get from small business owners is, how much tax am I actually going to pay this year? And the answer depends entirely on your income bracket and on understanding the difference between your marginal tax rate and your effective tax rate, because those two numbers can be very different. And if you're only looking at one, you're probably getting the wrong answer. Let me walk you through the Australian tax brackets for 2025 to 26, what actually changed with the Stage 3 tax cuts, and how to work out what rate applies to you. We are registered base agents and Xero certified advisors serving small businesses across Geelong and Victoria. Understanding what tax rate you're heading toward is a critical part of how I help clients plan their cash flow. So let's get into it. Before we look at the brackets, I need to explain two terms that people consistently mix up. Your marginal tax rate is the rate you pay on your next dollar of income. It's the rate that applies to the top slice of what you earn. Your effective tax rate is your total tax bill divided by your total income. It's the average rate across everything you earned. Here's why this matters. If you earn $100,000, your marginal tax rate is 32.5%. Actually, 34.5% if you include Medicare. But your effective tax rate on $100,000 is about 23.6%. You're not paying 34.5% on the whole $100,000. You're only paying that rate on the income above $45,000. This is one of the most misunderstood things in Australian tax. When I tell a client they're in the 34.5% bracket, they sometimes panic, thinking they're paying that on everything. They're not. Each bracket only applies to the income in that range. Okay, here are the Australian income tax brackets for the 2025 to 26 financial year. The first bracket, from $0 to $18,200. The tax rate is 0. You pay nothing on your first $18,200. This is called the tax-free threshold. The second bracket, from $18,201 to $45,000. The tax rate is 19 cents in the dollar on income in this range. The third bracket, from $45,001 to $135,000. This is 30 cents in the dollar on income in this range. Note that this is a flat 30%. There's no 32.5% bracket anymore, which I'll explain in a moment. The fourth bracket, from $135,001 to $190,000. The tax rate is 37 cents in the dollar on income in this range. The top bracket, $190,001 and above. The tax rate is 45 cents in the dollar on income above $190,000. And on top of all of this, there's the Medicare Levy, which is an additional 2% on most of your income. So in most brackets, add 2% to the rates I just listed for your real take-home impact. If you've heard about the Stage 3 tax cuts, and you should have, here's what actually changed on the 1st of July 2024. Before Stage 3, there were more brackets. The 19% bracket stopped at $37,000, not $45,000. And above $37,000, there was a 32.5% rate that ran all the way to $120,000. The Stage 3 tax cuts did three things. First, they extended the 19% bracket from $37,000 up to $45,000. That's an extra $8,000 that now gets taxed at 19% instead of 32.5%. Good news for middle-income earners. Second, they replaced the old 32.5% and lower 37% bracket with a single flat 30% rate from $45,001 to $135,000. So if you earn $80,000, that income between $45,000 and $80,000 is taxed at 30%, not 32.5%. Third, the $120,000 bracket threshold moved to $135,000, and the $180,000 top threshold moved to $190,000. Net result, most people earning between $45,000 and $135,000 pay less tax than they did before Stage 3. If you're a sole trader or small business owner in that range, you should have noticed a reduction in your quarterly PAYG installment from the 2024 to 25 year onwards.